So the curtain falls on part one of the Greek drama, the biggest debt restructuring in history, as 86% of bondholders accept the deal to turn in their bonds for new ones with less than half the face value. A default averted for now. Is the risk of contagion over? I'm Axel Threlfall. This is Reuters Today. Let's get out to the LSE and Alpesh Patel of Profinium Partners. Morning to you, Alpesh. High take-up, but would you agree a de facto default here?
Well, we've been saying for a long time that there is going to be a de facto default. The only reason that whether or not there's actually a legal default matters is because of the credit default swaps and the payout on the legal insurance. But for all intents and purposes, what's important here is what some of us have been saying for months, which is that they're going to have to elongate the repayment period and they're going to have to write off vast chunks, which they've done. Now, that's important and that's good that that's happened because it's spread the risk from being held with a few entities to many more, and that's all positive.
Are you surprised by the positive reaction we're getting from the likes of the IIF? I mean, surely this shuts the door to Greece getting more money from these partners.
I don't think the Greeks are looking at how they're going to be raising more and more money going forward. I think they're just looking very much at the short term, which is reducing their repayments on a month-by-month basis. And then going forward, they say what essentially this has done is just push the problem out, which is what's been the problem anyway for the last 6 months. That just gets pushed out to the next month. Now, this has bought more than 1 month's worth of breathing space, but ultimately, given that it's only reduced the debt-to-GDP ratio from about 160% to 120%, that problem still very much remains, and the yields on these new debts will probably be roughly estimated at about 13 to 15%, though some banks are saying it will eventually rise to about 20%, so you'll get the problem all over again, but at a lower debt level.
And I guess, leaving that aside, all eyes on the payrolls now. Is that how you trade today ahead of that?
Yeah, absolutely. I think and these are going to be very important figures because now we're going to forget Greece in about an hour and focus on the US. And those figures coming out at 1:30 GMT means that we're just going to look to see trading that as soon as the figures hit, either long or short, based on the price action. Don't want to try and second-guess those figures, though the trend has been positive. And if it continues to be positive, I don't think it's going to knock the ball out of the park, to use an Americanism, which means we'll probably get a bit of a sell-off on the dollar after the results come out, because I think we're anticipating the figures to be positive, and we'll sell that fact once that actually happens in reality.
OK, Alpesh, thanks a lot.